That's kind of the essence of price action trading, is not only the strength of the trend, but is that instrument clean enough and tight enough and wide enough to trade in the first place. Okay, another thing is the difference between narrow versus deep cups. Are you doing differential trading based on relative strength of the patterns? Okay, that's something you want to add to the mix. What I want to encourage you to do is think of a light size versus a heavy size. And by the end of the 2 days you can fill in the blank, but for now, if you would, just write the words light and then an underline and then the word heavy and underline. And by light, I mean it's a suspect. It's still worth taking a shot, but you're not real sure about it, so you want to go light on the size. Maybe that's one standard lot or whatever dollar figure is. It makes sense. Now, if you have a really strong one where the planets line up, you've got a very strong breakout pattern, and there's multiple confirming technicals, like a wide range candle at the right side of a cup. But on the other side, if you have narrow, then wide, then larger candle, those usually continue because that's increasing heat or increasing volatility in that chart. So do you see, for example, if you do insist on trading pivots, I want you to look for bullish engulfings like right here, or a sequence of 2 candles in a row where you've got a, let's say you're open long right here, say from there. I taught you a candle reversal signal. Well, let's quickly turn to the trader next to you, and where would be, say, 2 exits, or a place that you would get out, and where would be a re-entry? What's the story of this candle pattern with the intent of applying that, say, it starts to bounce next week or the week after on the right side of the chart? Because we're always looking at cycles that are repetitive in your trade. So what's the right side of the chart going to tell you based on previous history? Let's say you got in long right here at the right place, which was nice. What would be the trade setup? What would you guys have done? So let's talk about that. So I want to start off by doing some A-B charts, the strong charts versus weak charts. So this is a good example of a strong recent one from just a few days ago. This is our euro dollar. And what I want you to notice about this is the strength of the right breakout and a wide range candle. Now if you're a pivot trader, we do not have a signal of RSI under 20, nor do we have a signal over 80, but we did have a pivot off of the lower Bollinger Band. The main thing to point out for this chart is the difference in the relative strength of the charts. Do you see the previous one here has a relatively strong breakout? This one's relatively choppy, and although it is looking like it's taking out new highs, the fact that it consolidated for so long before taking out new highs makes it more suspect, and we don't want to take a shot at that kind of chart. So as we look for strong breakouts, we really want to look on the very strongest of the patterns, and from a price action trading standpoint, your life as a trader is spent in that kind of determination, going back and forth between charts and sorting out which ones have the strongest continuation runs. Let's go through live charts right now. These are live real-time charts, and figure out which of these chart patterns are best candidates for should you be trading it in the first place, yes or no. So this one, is that one you'd want to trade? It's wonky all over the place. You're not going to hit it, or you're not going to get a good trade-off. So why, and I don't care if you like the pound Swiss, that thing's all over the map and you're not going to trade that well. That's going to end badly, as my daughter would say. That's a story that ends badly, Daddy, so you don't want to trade that one. This one, if you were to grade it, I mean, it's okay because it's kind of a wonky uptrend. It's choppy, but it's still a sustained uptrend. It's telling you a story of increasing institutional buy pressure over time. And sure, we can say, okay, we'll go 30 pips above the high, and if we get stopped out, we'll take another shot higher. But that one's an uptrend continuation. That one is better or worse yet? Is that the best of the charts or the worst of the charts? The best of the times, the worst of the times. That's your best odds chart. Look at it like even money. It's all about price action boxes or box range consolidations. Once it escapes one support resistance area, you look at the same, you project up that depth, either a cup depth or previous trend depth, as the entry and exit target for the right side. So here, you could see, right here would tell me what? Would this be a smart place to be buying this thing or no? And the trick is too, you don't buy, and this is a rider downer, if the ADX pierces 30 but then closes the day, the 24-hour cycle on Forex under the 30, then so use the MACD and RSI as initial lead indicators, and then use the unencumbered chart, the straight chart, the price action chart like this. That's what I trade off a price action chart for a strong breakout continuation. So this one currently is telling us nothing for continuation. We knew that that would be a strong one earlier. If we look at the difference in these, it's always a fine-tuning approach. Which one has the best? When in doubt, or when you're trying to decide which of several charts is best, the easiest determining tiebreaker would be what? Using candles, what would be a tiebreaker that tells you, for For example, I look at, I'm trading the pound yen and the euro yen. Which of those two has the best odds of working out on the right side of the chart based on the candle patterns? Well, all right, good answers. Let's take a quick stretch break for 3 to 5 minutes, and we'll come back, and Peter Bain will pick it up, and we'll move on.